I don't think my parents particularly cared as long as I was happy. What I wanted to be was, in little kid speak, was a scientist. I spent a lot of time outdoors, so I enjoyed biology, I enjoyed chemistry. My mother probably would have bet anybody that I would have ended up being like a forest ranger or something like that when I grew up. So back then, and remember we're talking about 1980 now, I had just graduated with an education degree from Northwestern University, and I was looking for a teaching job, and I needed some money. And so a friend of a friend got me a job as a runner on the CBOE. And my intention was to work there and make a little money while I was looking for a teaching job, and then once I found a teaching job, to leave. But that didn't happen. My first ticket to trade was a firm badge on the CBOE. So it was a house account. I didn't buy it. It was a badge that was given to me, kind of as a house trader. And my first trading job, which I think was in 1982, was as a kind of an arbitrage strategy back then, where you could arbitrage interest rates by trading what are called conversions and reversals in stock options. So that was my very first job, where I was actually in the pit trading and executing trades. So that was the first badge I ever had. The first one I ever owned was what they called a COM. It was a commodity options seat on the Chicago Board of Trade, and then later on I owned an AM, which was an associate membership on the Chicago Board of Trade as well. Other than that, other than those two, I generally leased my seats, wherever I went. Well, again, back then, there was no formal process for getting access to the markets. You either knew somebody, you had family involved in the markets, or you just managed to worm your way in as kind of a peon. So, I got in that way as a runner, and then a phone clerk, and then later on I had, an arbitrage trading job. And then eventually I found my way down to the Chicago Board of Trade, where a character by the name of Charlie Cottle backed me to trade bond options. From there, we kind of grew the business, and as we, kind of grew the business and needed people, we're on the look for a certain, kind of personality type, type A, aggressive, quick on the feet, disciplined, numerate, obviously. And those people at that time, it's not like you could go recruit from a university. There were no formal classes on how to trade options or how to pit trade or anything. You were just looking for sharp, street smart, savvy people. And they could come from anywhere, and you could find them anywhere. People would show up and interview for jobs, and we would interview them. But sometimes we would just find them places. You'd find somebody working in a restaurant. You'd find somebody parking cars. But if you, detected that this person was sharp, good with numbers, maybe they could make your change within seconds without even thinking about it. These were the kind of people we were looking for. So we ended up with a really diverse set of people working for my trading company back in that time. We had a real spectrum of people working for us. There were people that had, master's degrees from the University of Chicago, and there were people that were high school dropouts. Everyone always just say discipline, right? But I think the main thing is the psychological makeup. You obviously have to have a thick skin, and you have to be quick, and you have to be disciplined and focused on what you're doing, because there's a lot of noise, a lot of distraction, and a lot of, what looks to the outside observer to be just complete chaos. But, for me, I think the people that had the psychological makeup to lose, ingest the information that came with losing, and to immediately get right back on track again. The people that I think could understand the game, that if you were right 51% of the time and you were wrong 49% of the time, but you managed the losing events properly, and you took from the losers what you could get in terms of information and feedback so that it could correct you for your next decision, those were the people that were very successful over the long run. It wasn't too bad except for the pit crud. So you were basically perpetually sick. So you're in a small confined space with people screaming and yelling and spitting and sweating and rubbing up against each other all day long. And these people have families, they have little kids. And so it was a gigantic petri dish. You were basically sick, every day of the year with some kind of lung or throat or head, cold of some sort. My parents never knew what the hell I was doing. They came down to visit. I took them to the floor. It looked like just a bar fight, kind of explaining to people, what was going on and stuff like that. But I don't think they really ever had a firm grip on what I was doing. But again, if I was happy doing it, then they were happy. In terms of my immediate family, my wife and kids, I think it caused some problems. It was definitely, had an impact on the relationship, and it definitely had an impact on on family life. It's super stressful, super time consuming. A lot of time spent up at night when markets trading at night, markets trading early in the morning. You have events taking place overseas that are impacting your positions. You're managing people, so now you've got, instead of having one position, you've got 40 positions you have to worry about, and it definitely was stressful. That was an interesting experience. Now, I didn't stay there all the time. I came and went, so I would go for 2 weeks. We would rotate, so I had a partner, Bruce Lawrence, who you know, and a couple of other friends of mine from, they were British, and so we had a management team of about 4 people plus one Indian guy, Achal Darbari, and we would rotate. So it's not like we were there the whole time, so I was kind of coming and going. So it wasn't great. In retrospect, I probably wouldn't do that again, but it seemed like the right thing to do at the time. We were doing a lot of things. So we were trading the Indian domestic derivatives market, so the National Stock Exchange, options, futures, and cash, the Bombay Stock Exchange. We were also trading on the 2 commodities exchanges versus the regional exchanges, so it was kind of like a regional arbitrage between rupee-denominated commodities versus dollar-denominated commodities, which ended up being a synthetic rupee-dollar forward trade. We were also trading stuff on the CME and stuff on the Life, so we had basically built out trading arcades in India of Indian nationals trading their domestic products and regional products, as well as U.S. and UK-based products. I wouldn't change that at all, because it's a part of history, right? It's like, when I was a kid thinking about cowboys on the cattle drive, it's almost mythical. It's, can't believe it actually existed and it ever happened. And there's just a kind of little tiny fragment of it left. But at the time, the way things were going at that time, and the business that was going through the pits at the time was incredible, and it was an incredible experience. So I don't think I would ever trade that. I think I would have made myself a little bit more ruthless in the way that I managed myself and managed other people. In that, when you get kind of sucked into it at the time, it seems like it's never going to end. Like, it seems like the music's never going to end, the party's never going to end. And so sometimes you don't pay attention to the, minute details of things, because you think that there's always going to be an opportunity to overcome them, and that it's never going to end. And so you tend to get sloppy, or you can tend to get sloppy, or I tend to get sloppy sometimes, with managing my trades, managing the people that work for me, things like that. If I'd have been a little bit more tighter and a little bit more cognizant that, this can't go on forever, it needs to end at some point, there needs to be an exit plan, I think that would have been a little bit better for me. I was offered an opportunity. It was about 1993 or so, and I was still, I think, in the bond options at the time, and I was offered an opportunity to trade fixed income derivatives in Europe. And at the time, the European Monetary Union was just starting to set up. And so they were trying to push the convergence of all the different European currencies into the euro. And so I thought the opportunity was just going to be enormous for trading options on sovereign debt of those countries while they tried to manipulate their balance sheets in order to form the euro. And there were amazing opportunities. So that's when I left the floor. And I did that for about 4 years, all the way through the convergence. At the tail end of that, what happened that kept me off the floor forever was the story I relayed earlier, where I saw the first kind of salvo of the electronic revolution take place, where the entire open interest and the entire volume of the Life Bund futures pit moved almost overnight to Frankfurt. It went from being pit traded to electronically traded, like that. what I really look back on fondly is just kind of the camaraderie of the pit. You know, it had its own interesting dynamic. Even though you were, you know, competing against every one of those people in that pit, you know, tooth and nail, sometimes there were fist fights, but it was still kind of a, you know, a kind of a family where you looked out for each other. I mean, the, you know, analogs we have today, you know, for, you know, fat finger trades and things that happen electronically, those things happened then too, but you had this kind of living, breathing organism that was kind of watching out for each other, even if they were your competitor. If some guy did something really stupid and he quoted the wrong price or made the wrong market, or if he had, you know, at that time we were running theoretical values on, you know, on sheets that we would print out. If somebody input the wrong values and generated wrong theoretical values and someone started trading off of that, you would just grab them and say, hey, you're making a mistake, you're doing something wrong. You know, you could have easily just let them go and taken advantage of them. Nobody would do that. You know, there was a certain honor system in the pit that I really liked. So you know, even though again you might hate, you know, half of the people on any given day, you still wouldn't let them do anything that to themselves that was catastrophic, you know, to themselves or to their family. And you took care of all of that stuff, you know, and it always amazed me, you know, when people looked at it from the visitors gallery and it just looked like a bar fight, which is what it looks like. I mean, what was actually going on, you know, in the undercurrents was very, very, you know, disciplined, methodical, and systematic. And so risk management, you know, trading, you know, accounting, things like out trades, you know, we always kept an eye out for each other and kind of took care of each other. And when people got in trouble, if someone blew out, you know, a lot of times we passed the hat to get them back in. You know, you saw that happen, you know, multiple times. You know, even with competitors. You know, somebody, hey, so-and-so had a bad position or made a mistake, and you know there was a limit move and they're gone, and it's like, okay, you know, people would pass the hat and raise enough money to get them back in. Even though that guy might be standing next to you the next day competing with you, you'd finance them to get back in. And that was just kind of the camaraderie of the pit. And I think those are my favorite memories of just, you know, being in the pit, the dynamic, the vibe, you know, the energy. You know, every day was different. Every day it was like walking out into, you know, Michigan Stadium and, you know, getting ready to play a game. You know, in the Board of Trade in the old bond room, as I'm sure you remember, you know, before they built the annex, you would walk through a tunnel, which unfortunately went past the restrooms, but you would, you might want to edit that out. You'd walk through a tunnel, and then when you emerged on the floor, there was just this roar, and it was very similar to, you know, playing football and running out into a stadium, and it had the same, you know, kind of energy. You had to have your game face on, and you better be ready. You know, if you weren't ready, you better turn around and walk back off. You know, what's funny is the cultures, you know, so the two exchanges I probably bounced around between the most were the Board of Trade and the Merc, right? CBOT and CME for you youngsters. And the cultures were so different, where the Board of Trade was like a gladiator ring where almost anything went. And there were fist fights all the time. And they were knocked down, drag out, went on for 10, 15 minutes. You know, people just pulverizing each other before security would finally come and break it up. And then, you know, then the Merc, where everybody's more genteel, and if you shove somebody too hard, you get written up for, you know, undue force when entering or leaving the pit. So, you know, it was funny. The two different exchanges had a really different culture when it came to that. But yeah, there was a lot of bumping, and you know, a lot of ex-athletes were there. At one point, it was very fashionable to hire, you know, basketball players. So there was a lot of 7-footers, a lot of football players. You know, again, the whole idea of, you know, people that are fast, aggressive, you know, focused and disciplined tended to drive people toward, you know, toward hiring athletes. And so, you know, type A personalities are type A personalities, so stuff would happen. Differences in hand signals. The CME had different hand signals, they had different terminology that you had to be aware of. Simple example that probably nobody remembers, maybe you do, is that on the CBOT, whether you're buying or selling an order, you would just say sold. Whereas on the CME, if you were buying, you had to say buy them. You can't say sold. So if somebody was selling something on the board of trade and I wanted to buy them, I would say sold. If somebody was buying something on the board of trade and I wanted to sell them, I would say sold. But on the CME, if somebody was selling something, I had to say buy them. And just little things with the hand signals, right? The 60, 70, 80 are out here, versus on the CME, they might be over here, stuff like that. In 1984, U.S. Treasury bonds, the volatility was enormous. We were just coming off of, the Jimmy Carter years, and then we were into, Paul Volcker, raising interest rates to try and quash inflation. And so the bond, all the fixed income contracts were just flying, and the volatility was incredible. So, the bid-ask spreads were very wide. The volatility surface itself, and people hadn't even really started to scientifically study those things. So in terms of being able to trade with, some sort of theoretical volatility surface, it was really the Wild West, because there was nothing, available in order for you to do that. You had to kind of come up with your own methodology for pricing and your own type of model that you would have in your head that you would consider to be, okay, in my mind, this is what the model is, and I'm going to trade based on that. And that model was all over the place because there was really nothing to keep it, stable. As bonds went up and down, the cheapest to deliver changed, and ebbs and flows of order flow, and so the volatility skew was all over the place. The term structure skew between months was all over the place, and commodities are a lot more different than stocks because they're not fungible from month to month. So whereas in listed options, I can do calendar spreads, and I know that the underline I'm using for month A is going to be the same underline for month B. It's not the case with commodities. And so stuff was everywhere. There was a lot of opportunity, but also a lot of risk.